Welcome back to another video. Soel here, and today I want to discuss the best candles and candlestick patterns that you can use for intraday trading. Please pay attention that this is not a guide to reading and analyzing candlestick charts or different types of candles and patterns, because I have complete tutorials on these subjects. The links are also placed in the description of this video, and I recommend you to watch them first if you're a complete beginner and you know nothing about candlestick patterns. In this video, I just want to show the candles and patterns that more frequently happen in intraday time frames, and they can be part of your analysis in scalping or day trading. Before we start discussing the patterns, I must mention a very important point here, and it's that you should never take your trading decisions only based on these candles and patterns. They only give you some hint about the balance of buying and selling forces behind the scene, and these candles and patterns must be used in conjunction with other tools and aspects of technical analysis. Let's begin with individual candles that their formation on the chart can give you some hint and can be used alongside with other tools in your trading strategies. The first one, Marubozu. Marubozu is a Japanese word meaning shaved head or bald head. In green Marubozu, the opening price and low price are equal, and the close and high are also equal. This candle shows that buyers were very aggressive in the session, and they had the full control from the open to close. This candle shows high buying pressure, higher than the ordinary long green candle. When you have a bullish signal from your trading strategy and a green Marubozu forms on the chart, it further confirms that the price is gonna advance. And in red Marubozu, high is equal to the opening price, and also close and low are equal. This candle shows that sellers were very aggressive in that time period and had the full control of the price from open to close, and it shows high selling pressure, higher than ordinary long red candle. When you have red Marubozu alongside with a bearish signal from your trading strategy, you will have higher probability of achieving the expected result. There are also other types of Marubozu which have upper or lower shadows. The ones with no shadow in the closing point are worth paying attention, otherwise they are no significantly different from an ordinary long candle. The next candle, Doji, which is a very significant candle and very important whether considering individually or in combination with other candles as a pattern. Dojis are the most important candles among others, and also they are part of some important patterns and strategies. There are different types of dojis, and each of them has its own meaning and interpretation. At the moment, plus sign doji and long leg doji will be explained, and the cross doji and inverted cross doji will be discussed later in this video. In plus sign doji, or we can just call it doji, the opening price and closing price are approximately equal or totally equal in the ideal situation, and the shadows are small and it looks like a plus sign. A doji shows indecision and a deadlock between forces of buyers and sellers. A doji candle is neutral and they don't mean anything but indecision, and the interpretation depends on where it forms or what the previous candle is. For example, a doji that forms in the top following an advancing of the price or near a resistance level, it shows that buyers are weakening and a change in the direction of the price may happen. Or when it forms in the bottom following a decline or near a support level, it shows that sellers are weakening. As I said, the previous candle is also important in interpretation of a doji. For example, a doji after a long candle is more significant than being after a short candle. So when you have a bullish signal or bearish signal from your trading strategy and a doji forms on the chart in a way that supports your signal, this can further confirm that the price is possibly gonna go in the expected direction. Please pay attention that in practice these signals don't necessarily happen at the same time, and all that matters is that how a groups of tools and concepts and the price action confirm your trading decision. And long leg doji is similar to plus sign doji but with long shadows. In compared to plus sign doji, buyers and sellers were more active, and each of them had the control of the price for some time and could push the price up and down significantly. But finally there was a standoff and the price closed approximately in the opening level, and this shows indecision among buyers and sellers. Long leg doji is also neutral like plus sign doji, and it means nothing but indecision, and the interpretation is exactly the same depending on where it forms or what the previous candle is. But plus sign doji has greater amount of indecision, and it's more significant than the long leg doji, because in long leg doji buyers and sellers were more active in the session, and this can result in an unexpected shift in the balance because of their prior activity. Alright, the next candle worth paying attention in intraday trading is hammer. This candle has a small body and the color doesn't matter because there was a a little movement between opening and closing price. It has long lower shadow and small upper shadow or non-existent upper shadow in the ideal situation. Hammer forms in the bottom following a declining of the price or near a support level. The long lower shadow shows that the lower prices were rejected by market participants. It shows that at first sellers had the control and pushed the price down significantly, but at the end that was the buyers who had the upper hand and drove the price near the opening level. This candle is naturally bullish and showing buying pressure, and forming at the bottom it gives the possibility that the price may advance. Another similar candle that has exactly the same interpretation and indication is cross doji, where the open and close price are approximately equal or totally equal in the ideal situation. Cross doji is more significant and reliable than hammer in the same condition, and it's because of the body, which the open and close are equal, and this has greater impact for the next candle. And another candle that is interpreted exactly like hammer and cross doji is dragonfly doji. Dragonfly doji is similar to cross doji, but here we don't have the upper shadow. Actually, the open, close, and high are equal. Dragonfly doji is more significant and reliable than cross doji, and it's actually considered the ideal version of the cross doji. The formation, interpretation, and indication of dragonfly doji is exactly similar to hammer and cross doji. Alright, the next candle I want to discuss is shooting star, which forms in the top following an advancing of the price or near a resistance level. Here we have a small body and the color doesn't matter because we have just a little movement between open and close price, and we have long upper shadow and small lower shadow or non-existent lower shadow in the ideal situation, which makes the candle even more significant. The long upper shadow shows that at first buyers had the control and drove the price to higher levels significantly, but then sellers stepped in, took the control of the price and pushed the price down near the level it was opened. This candle is naturally bearish and it shows selling pressure, and forming somewhere in the top gives the possibility that the price is gonna decline. And another similar candle that is exactly interpreted the same way and gives the same indication is inverted cross doji, where the opening and closing prices are approximately equal or totally equal in the ideal situation. Inverted cross doji is considered to be more significant and reliable than shooting star, and the ideal version of inverted cross doji is gravestone doji, where the open, close, and low are equal. The formation, interpretation, and indication of gravestone doji is exactly similar to shooting star and inverted cross doji. Alright, now let's discuss patterns including more than one candle that frequently happen in intraday time frames, and they can help us in our trading decisions in scalping and day trading. The first one is engulfing pattern, and we have two kinds of it, bullish and bearish. Bullish engulfing pattern forms in the bottom following a decline or near a support level, and it gives the possibility that the price is gonna turn and advance. In bullish engulfing pattern, the first candle is a short to medium red candle, and the second candle is a long green candle that the body of this green candle totally engulfs the whole body of the red candle. In its original definition, the second candle, the green candle, should be opened with a gap below the first candle close, but we can show flexibility on this, and the same level openings are also accepted. It's better and it gives more significance if shadows of the first candle to be in the low to high range of the second candle. However, the focus in this pattern is on the bodies, and the body of the second candle should engulf the body of the first candle. The longer the second candle, the stronger is the pattern. And also pay attention that the first candle should not be a doji, because doji candles are easily engulfed by any candlesticks, and it makes this pattern to lose its effectiveness. Having this pattern forming somewhere in the bottom in combination with bullish signals generated by other tools and strategies gives more probability that the price is gonna reverse and advance. And bearish engulfing pattern is the mirror image of the bullish one. Here the pattern forms in the top following an advancing of the price or near a resistance level. The first candle is a short to medium green candle, and the second candle is a long red candle that the body of this candle totally engulfs the body of the first candle. As I mentioned for the bullish one, here also we can show flexibility and accept the same level opening of the price. The longer the second candle, the stronger the pattern, and similar to the bullish one, the first candle should not be a doji. Having this pattern somewhere in the top in combination with bearish signals of other tools and strategies increases the probability of having a reversal and declining of the price. The next pattern is dark cloud cover. This pattern forms in the top following an advancing of the price or near near a resistance level, and it gives the possibility of reversal and declining of the price. The first candle is green and the second candle is red. Both of candles have long body and small shadows, or they don't have shadows. Small shadows are not a must for this pattern, and with longer shadows the pattern can still be effective, but not with so long shadows. In its original definition, the second candle opens with a gap above the first candle close, or ideally above first candle high, but we can show flexibility on this and also accept the same level openings. Then the second candle must close lower than the midpoint of the first candle. The greater that the red candle penetrates in the body of the green candle or covers the body of the green candle, as the name of the pattern implies, the stronger is the pattern and more possibility of changing in the direction of the price. As I said, the red candle must close lower than the midpoint of the green candle to make this pattern valid, and if it closes lower than the open of the first candle or at the same level and totally engulfs the body, it becomes engulfing pattern. The difference between bearish engulfing and dark cloud cover is that the first candle in bearish engulfing pattern is not considered as strong as the first candle in dark cloud cover, but on the other hand, the second candle in bearish engulfing is considered to be stronger because it closes below the first candle open. So by considering equal conditions for the two patterns, bearish engulfing is stronger than dark cloud cover. Having a dark cloud cover alongside with bearish signals from other tools in your strategy increases the probability of achieving the expected result. And the last pattern I want to discuss is piercing pattern, which is the mirror image of dark cloud cover. This pattern forms in the bottom following a downtrend or near a support level, and it gives the possibility of reversal and advancing of the price. Here the first candle is red, the second candle is green, and both of them have fairly long body with small or non-existent shadows. The second candle opens with a gap below the first candle close or at the same level, and then closes above the midpoint of the first candle. The greater that the green candle pierces in the body of the red candle, the stronger and more significant becomes the pattern, and it gives more possibility that the price direction may change. And in the case that the green candle closes above the first candle open or at the same level, it becomes a bullish engulfing pattern that gives even more possibility of changing in the direction of the market. The difference between piercing pattern and bullish engulfing pattern, as I just explained for dark cloud cover, by considering equal condition, bullish engulfing is stronger than piercing pattern. Having a piercing pattern following a declining of the price or near a support level alongside with some bullish signals from other tools in your trading strategy can increase the probability that the price may turn its direction and start advancing. In this video, I discussed some candles and patterns that more frequently happen in intraday time frames, and they can be part of your analysis in scalping or day trading. But please pay attention that you should never take your trading decisions only based on these candles and patterns. They only give you some hint about the balance of buying and selling forces behind the scene, and these candles and patterns must be used in conjunction with other tools and aspects of technical analysis. Alright, that's it. Thank you for watching this video. If you have any questions, feel free to ask and leave a comment for me. I'll answer your questions as soon as possible. If you haven't subscribed to my channel, please subscribe and hit the bell so you get the notifications of my new videos. See you guys in next video, and good luck with your trading.